Good afternoon, ladies and gentlemen. Welcome to panel 5 of the African FinTech Festival virtual edition, the first step leading up to our event happening in October later this year. Thank you very much for joining us. We're keeping the themes of throughout the day, and this one specifically around regulation and financial crime. The panel moderator for today is Rees, the chairman of MAF. Very warm welcome to everybody and enjoy, and I'll hand it over to you, Mike.
Okay, thank you, Migs. Good afternoon and welcome everybody, and particularly thank you to the panel who are going to help me on this session. And I'm not going to go through, we've got 45 minutes, so I'll let you read all their profiles on the web. What I'm going to try and do is set the scene a little bit, and then our panel is basically going to pick up some of the themes. But I want to start with using an article written in The Economist in April 2021, which made the statement about war against money laundering is being lost. And I thought that would be a good way of framing a discussion about where are we and what needs to change. So a few things which came out of that article, which you'll be aware of, which is digitization of economies is progressing very rapidly, and that's accelerated with COVID. Financial criminals are getting more sophisticated. A good example is the increasing growth in trade-based money laundering. Financial crime is about 7% of global GDP and growing. The US was in the vanguard of dealing with financial crime, but that very much abated under the Trump administration. But we can expect that to be revitalized under the Biden administration. UK tracked the US, but with a lag. But Europe has been a laggard and is now catching up rapidly with the 6th AML directive. Fundamentally, banks are still expected to be in the front line of dealing with financial crime. And the recent fines for people like NatWest and ABN show they're still in the firing line. And last year, the total fine for banks on financial crime still exceeded 10 billion US. So it's a big issue. And the fragmentation of the system, for a variety of reasons, is being exploited as a point of weakness. Collaboration and the use of data, and the better use of data, are clearly some of the tools we have to be able to counter this trend. So those are just some of the highlights I picked out of that Economist article, because I think it set a good backdrop for the conversation and discussions we're going to have. So let me start with you, Philip. In your view, how does the data privacy laws hinder the ability to curb financial crime? And what can we do to facilitate better use of data and collaboration?
Just as, excuse me, as a starting point, to give it some context, clearly Mauritius is driving fintech in Africa, and the opportunity is to emulate Singapore or even provide a sort of Amazon for financial services. And the big thing about the pandemic is that everything's gone global and digital, so the opportunities there to make a big success. To do this, you're going to have to have digital government and, importantly, digital regulation. And therefore, you're going to have to be able to collaborate with regulators on networks and while preserving privacy. Now, fortunately, there's technology such as federated learning, an AI technique developed by Google, where you can have collaboration amongst regulators without exchanging your data. So the technology does exist for Mauritius to completely automate government regulation, possibly in the future taxation and things like this. And at the core, obviously, is sharing regulatory information and collaborating with other countries. And these discussions are already underway, obviously, with the Financial Conduct Authority in the UK, the SEC, etc. So the good news is there is technology that will actually provide this information. the other thing that I would like to flag up is that most discussions about crime and automated regulation revolve around AML. What I maybe euphemistically call crime tech is we're yet to enter a new phase where we'll have billions of algorithms interacting with humans and with other algorithms, particularly in finance, where criminals actually create criminal algorithms. So although we're talking about, and we now can probably implement this with technology, do better regulation by sharing data on AML, it's a moving feast, as they say. And the future is going to get pretty nasty with not just people doing money laundering, but also people having corrupt data and algorithms that are deliberately criminal. But the good news is, for a country like Mauritius, with everything going digital, there's no reason why you can't automate everything, and especially regulation, and provide this as a service, particularly to the rest of Africa. I'll pause there and ask Mike, is that what you wanted me to cover?
Well, in addition to that, what about the difference in data privacy laws on banks being able to share data?
Yes, the key thing with the concept of federated learning isn't that you actually give up your raw data to the cloud to be analyzed, but if it were, take the algorithm to the data, so it preserves privacy. And I think this is going to be a game-changing technology. I think the things like GDPR in Europe is already being seen to be actually an impediment to innovation. And there was even a discussion today on the news where the British government are looking to actually downplay GDPR, particularly for financial services.
Okay, thanks, Philip. That's very helpful, and I'm sure we're going to come back to that. Let me turn to Yoshinee now. Yoshinee, banks are in the forefront of this fight against financial crime. What's it like working in a bank and having to deal with it? And particularly, how's it been through COVID in dealing with this?
Good afternoon, Mike. Good afternoon, everyone. Mike, I wish I was in a position to say this was a less tough journey, but it has not been the case. I think to the context that you've been talking, I'd like to add a $5.8 trillion worth of financial crime that is being perpetrated, and add to that, and add to the existing AML CFT risk that we are facing. We have COVID that has hit us, and COVID, I think, remain a very traumatic experience. But let's just make a point to say that COVID has brought about changes in the financial behaviors. So there has been an increase in the usage of online platforms. There has been an urge for banks to explore non-traditional banking methods. But with this come the less attractive, if I can say, and all the threats that come about with COVID. So we have had an increase in the risk in terms of mounting fraud risk, impersonation, increasing cybercrime. We have also seen the medical equipment that has, gone in great demand, and you see counterfeiting medical equipment, use and abuse of tender payments that again accentuate in the trade-based money laundering. So I think it's very difficult for banks, with the existing risk that we have, coupled with the risk that COVID have brought about. And I think, we as banks, we need to make sure that we modernize this fight against financial crime. And with digitalization of channels and all that, we really need to seek, other avenues to make sure that we are able to fight this financial crime issue.
Sorry, I lost my mute button then. But in terms of day-to-day, how does it affect you in the bank and everything you're doing? Has it fundamentally changed the way you go about your day-to-day business?
Absolutely.
Is it more difficult for customers to deal with you?
Well, I wouldn't say it's difficult for customers to deal with us. We're making it a more streamlining customer experience as far as Absa and banking industry is concerned. But I think for me, three things that we need to remember from a banking industry perspective. First is things are getting complicated and banks need to absolutely gear up and strategize accordingly. So there is a need to have an increased adoption of technology. There is a need for having the right resources and also for having the right risk concentration. The second one, I think, is banking industry needs to realize that we cannot continue using all methods to fight new problems. So there is a strong need to modernize and use artificial intelligence, robotics, machine learning, so that you're able to focus on the right risk. And the third point, and I think the most important point in my view, Mike here, and I heard Philip say too, there is a need for a stronger collaboration with the regulators, the law enforcement authorities, the financial intelligence unit, and you were citing information sharing as well. I think it's greatly important that there is this collaboration, because banking industry cannot be and should not be alone in this fight. They're definitely here to stay, and I think you keep saying whether this war is going to be won or lost. Maybe not now, but I would love to be in a position in the next 2 to 3 years with a partnership with the fintech companies to make sure we win this war as banking industry.
Okay, thank you for that. Let's come back in a moment. Jennifer, you hear a lot of conversation about banks and regulators and fines and everything else. Is this just something between the banks and the regulators, or is there a very real cost to society of what's going on here?
So I think if you ask the man on the street, or as we would say in the UK, the sort of man on the Clapham omnibus, what is financial crime, they're going to give you a particular view of what it was. And as I sit here in the home of sort of Grand Theft Auto, they're going to think of bank robbers and getaway drivers and people with guns. And the reality is that is not what is there. And when you look at some of the statistics in terms of the extent of financial crime and what it means to people, you're more likely now to be a victim of fraud or financial crime than any other crime, which generally I think the public don't quite appreciate. That is not what our view of crime is in terms of counter-terrorist financing, in terms of money laundering, in terms of the money that is stolen through corruption and routed through economies, and it's having a significant impact. And I think the bigger part of it is about the extent of financial crime is weakening people's faith in the effectiveness of both government systems and commercial organisations. And there's a responsibility on everyone in order to try and deal with the extent of financial crime.
So it comes out, but I think you make a very interesting point that I hear a lot of customers complain about the problems with KYC, being asked for additional documentation. But it's episodic in terms of their understanding of it, unless they are particularly affected by a fraud or a scam, I don't think they understand just the enormity of what's going on and potentially the cost.
So ordinarily I'd be sitting in my house in Mauritius and I can transfer money from my UK bank account to my Kenyan bank account and onwards to anyone within Kenya via M-Pesa. Which is great if I've forgotten someone's birthday, or if I see a handbag that I really want to buy or need to buy, which my husband would disagree with. And it's easy for us to move money. But I think what we have to understand is what every development for the consumer makes life easier for the criminal. And when you look at the extent of the money that's stolen, and I don't want to bore people with long, extensive statistics, but the amount of money that is said to be stolen through financial crime is significant and far greater than what we would see as traditional crime types. So the African Development Bank estimate that sort of $20 to $40 billion are stolen by public officials from developing countries every year. The sort of rates of illicit finance flowing through the continent are significant. And we hear these estimates of sort of GDP, etc., how much is being stolen. But what that means is that countries across Africa aren't able to meet their sustainable development goals. And one of the sort of UN statistics is about if the money that was stolen through financial crime was diverted to meeting the sustainable development goals, that would make half of the target towards achieving them in 2030. Half of the target, that's just financial crime on the continent.
Yeah, and I think that the slight problem is we use the financial crime as a sort of catch-all phrase. But when you break it down, to me, if you look at the amount of money being spent on trading in wild animals or human slavery, it is truly staggering the amounts involved. But I guess we don't somehow, we talk about financial crime, but we don't break it down into what exactly it means and what's going on.
And I think that's important. So when you look at it in terms of the average in the UK is 1 in 15 people will be the victim of fraud. 1 in 15. So however many people we have on this call, there's chances are quite a few of you will be a victim of a financial crime this year, whether or not you like it. That's in a personal capacity. That's not your bank or your financial institution. That's you as a person. In terms of the bribery and corruption, that money that has been stolen from our governments, from those services that we are all paying tax for, the money that is being stolen or used or moved to finance terrorism, to counter the non-proliferation sanctions in place by the UN, to fund terrorist attacks. These are significant and they're having an impact on our day-to-day lives. They're not numbers on spreadsheets. And I think sometimes when we talk about the billions or the trillions, we dehumanize what is happening and what the actual impact of financial crime is. And also, there's a problem there, Mike, in terms of whose responsibility is it to deal with it? Because everyone will say it's someone else's responsibility. So as a prosecutor, people quite often think it's my responsibility. We have colleagues here from banks. Some people would say it was their responsibility. But every day I get a text message from a bank in Mauritius on my Mauritius phone number. And they're advising me of transactions. Now, I wasn't sure whether this was a legitimate text message or a scam. So I spoke with someone in the know. And they said, oh, it's a legitimate process. It's a process that's been put in place by the financial institution to protect the consumer. Someone clearly had my phone number before. I've had this number for well over a year. And they're still spending money on their bank account. But that protection that's put in place by the financial institution to protect that customer is not working, because me, a random person, is being informed every time they know that. Now, that goes back to the earlier point on GDPR. I know what this person is spending their money on. If I wanted to find them, I can identify where they're shopping. Their habits are quite regular. And this is a solution that's been put in place to protect the consumer, but somehow it's fallen through the cracks. So that responsibility, in order to prevent financial crime, it rests with all of us, whether we're the consumer, whether we're the business, or whether we're law enforcement, because it's only as good as the individuals taking part in it.
Thank you, Jennifer. So Vikash, sitting from a regulatory point of view, collaboration is the theme here. And in many countries, you have fragmentation of regulation, which prevents collaboration. Could you just talk to us about how, through a regulator's eyes, you see this, and particularly the theme of collaboration, what you're doing in Mauritius versus what's going on in other countries?
Yeah, thank you, Mike, and good afternoon to everybody. Collaboration is in fact a key element with the regulators, especially when we have got several regulators for the financial services. In Mauritius, we have the Bank of Mauritius and the Financial Services Commission sitting at the end of a financial services continuum, if I can say that. And collaboration was paramount in ensuring that there is a very clear way of working. And one of the first steps that were taken in this direction was an MOU, and a memorandum of understanding between the Financial Services Commission and the Bank of Mauritius to spell out basically what all would be the flow of information, because this is a very critical in ensuring that financial crimes are basically stopped either from one end to the other. The Financial Services Commission takes care of non-bank institutions, but at the end of the day, when there are financial crimes and there is money involved, it will be routed through one of the banking circuits. So that was the first thing. And second, over the time, what we also noticed was that there were some operators dealing within what we call a regulatory arbitrage between what was the ambit of the Financial Services Commission and what was the bank. And to that respect, 2018, I was very much involved in it, where we came up with a separate law on national payments, whereby we just put it very clearly that whatever is payment on the domestic front is under the ambit of the Bank of Mauritius, leading to the fact that there should not be any such issue where someone would just operate that I am not being regulated. And it also gives the responsibility to the bank to ensure that even those who are operating without a license, they can therefore act on them to ask them to stop the activity. Now, furthering that, and currently we are very much in the AML-CFT space through the FATF, and there are very clear recommendations. I can cite there is recommendation 40, which requests that there should be collaboration, not only between the main players, but a number of institutions. The FIU is also one party to it. And I can cite the example of a tripartite MOU signed between the Bank of Mauritius, the FIU, and the FSC to ensure that there is collaboration. And to put it further, basically towards our collective endeavor to fight financial crime, last year in August, there was a memorandum of cooperation signed between at least 7 to 8 institutions, which form part of the core of the AML group. And that involves, again, to cite Bank of Mauritius, FSC, FIU, the Accountant General's Office, the MIPA, which is the regulator for the accountants. So we just closed the loop, and these institutions led to the creation of what we call the ICC, which is the Interagency Coordinating Committee, which meets at least every month to share information around the table and to ensure that whatever is AML-CFT related actions, basically they are coordinated, and we can find the trace basically between one institution to another one.
Vikash, let me just a follow-on question, if I may. Unfortunately, in life, that to Jennifer's point, that this is becoming almost BAU, the level of financial crime, and people accept it, and there's no shock horror. It's not until you get events like 9/11 happening, and I would argue that the reason the US is was in the vanguard of dealing with financial crime was largely as a consequence of the terrorist financing around 9/11. And then of course, it gets very political. In your view, how do we get increased awareness about the human cost and the social cost? Because politicians, I don't believe, really understand the extent of this until there's an incident. So you're trying to deal with the everyday life and doing the right things. You're going to get episodic responses from politicians, but without them really understanding the broader consequences of what's going on.
Yeah. Basically, this is quite a tricky one. I can say that there is an approach that we have changed recently at the level of the Commission. We are very much aware that laws and regulations are basically backward looking. They are based on what were the previous issues, and then they are written to prevent things that perhaps might not happen again. And what we are advocating to our licensees is to look basically, come out of this tick box approach and look into basically another way of approaching. And at the level of the commission, we have come up with what we call a AML CFT handbook, which basically is a transcription of what the law requires them today to do. But what we do, we add a layer of what we say an adaptation to the new things in terms of practical things. Now, to go into these elements of human cost, what we have in our ambit is a full-fledged financial education or financial services education, which is under the mandate of the commission. Basically, there is a fund for that, and they need to go and interact with the people. But eventually, in all those cases, when it comes back to, and when you're mentioning human nature, there is a very two element. You can give the best of, let us say, the education to people that this should not be done that way. Eventually, there is an element of greed that comes in. And you will find that in terms of the different types of crimes that are coming in, that even people, and those who are the best alerted or educated in terms of financial education, they find themselves victim because there are some element of tact that come in where people fall prey to those. In most of the cases, technology was good, everything was good, but this human nature, and especially these days, sharing too many personal information on the social media just adds to it. So your first trend, whether we are losing the fight against financial crime, I would come back to say that basically there is a big element of human psyche that we need to also cater at the same time with regulations.
Okay. Thank you, Vikash. Anil, let me turn to you. So the bad news is you're going to continue to be in the forefront of dealing with this. You're at the forefront of this war. What more do you think banks have got to do, both, and I would phrase it both individually and collectively, in countering a lot of these issues?
Thanks, Mike. I'd start off by saying, organized crime requires an organized response. And, I think gone are the days where banks would predominantly follow kind of a silo approach in terms of its financial crime program. Banks need to follow kind of a holistic ecosystem in terms of combating financial crime. So what I mean by that is your policies, your standards, your controls have to be aligned to your specific risks and threats. If you believe, as an example, companies operating, let's say, in the precious metal industry is a higher risk than other types of entities, and that's based on the actual risks and threats that you're seeing, your response has to be aligned to that. Now, in order to do that, your risks and threats are ever evolving. They're always changing. So financial institutions have to be agile enough to be able to amend its response as it goes. In the old days, banks would come up with a policy. It would go through quite a heavy bureaucratic process in terms of getting that policy approved, and it would go through an annual review. In South Africa, we have a new concept called an RMCP, which is your risk mitigation compliance program. And, that's not a policy or a process, but it is your all-encompassing financial crime prevention program. And that kind of program needs to be agile enough to be amended as your risks and threats evolve. I think the second component is, there's a strong focus on surveillance and the way in which banks are managing their surveillance program. So I earlier mentioned risks and threats. It's important that your surveillance program targets those specific risks and threats. And again, what I mean there is, if you, for instance, picking up a huge amount of, for instance, drug trafficking or corruption, as a bank, you need to understand what are your primary risks and threats, and you need to be able to ensure your surveillance program is geared up to tackle that specific risk and threat. So how do you do that? And what is absolutely key is understanding what are your red flags, what are your indicators of those specific threats, working with resources like data scientists to be able to build analytical models to identify behavior, transactional behavior, customer behavior that resembles those risks and threats. So as and when a customer resembles those risks and threats, you are able to immediately identify it. And that allows you to file much more meaningful SARs to your FIU. When an FIU then gets a SAR from a bank or from any financial institution, they're then getting information, not that a customer is behaving suspiciously, but more that a customer is behaving in a way that indicates he's a drug trafficker, or he is involved in human trafficking, or he might be poaching a wildlife and illegally transporting it to whatever jurisdiction. And it allows them to obviously work much closer with law enforcement on specific targets. And I think, Mike, thirdly, and most importantly, and it was mentioned quite a number of times by the previous panelists, is the public-private sector collaboration. I think it cannot be mentioned enough. It's absolutely key in the fight going forward against financial crime. And it's the reason I believe, where institutions or countries might be failing in the fight against financial crime, it's probably where there's not a sufficient collaboration between the public and private sector. That allows a speedy response to a specific threat. You mentioned 9/11. We've seen terror threats across a number of African countries as well. And the only way you can immediately respond to those threats is where you almost have law enforcement almost has senior banking officials on speed dial, where you can immediately mobilize people to immediately respond to a threat. In South Africa, we've recently implemented what's called the South African Anti-Money Laundering Integrated Task Force, which is a public-private sector partnership between the banks, the FIU, as well as the banking supervisor under the South African Reserve Bank. And whilst we've only been running for just over a year, we've shown some good progress, and a lot of the quick responses that we've had to specific crimes is as a result of that specific collaboration. The collaboration is not just around investigating known targets, but it's also around sharing what are those risks and threats. It's pointless Absa as a bank identifying a specific crime as a threat, but not necessarily working jointly with other banks as well as with your FIU on what are the key indicators of those specific threats. So, that's the way in which we kind of tackling it in terms of understanding your risks and threats through what we call expert working groups, and then also focusing on specific targets through what we call tactical operation groups.
But let me bring it back maybe to Philip and where we started here, because I think your point was that, banks at the moment file SARs, we file them with the FIU, and it depends on the FIU being able to aggregate the information to be able to bring a successful prosecution. Now, that's a fragmentation which probably the financial criminal community really enjoyed, because the chances of two SARs coming from two banks and being matched by the FIU seems a pretty remote event. What's preventing banks actually sharing data at a lot earlier stage and combining and looking at algorithms across a broader range of transactional data other than just your data?
Mike, you're spot on. If you look at it, what's absolutely key to an effective financial crime program is data, right? And the more data you have, the more effective you become. Now, at the moment, the minute funds leave your bank, the money trail is lost. So, through these public-private sector collaborations, you do kind of have some view in terms of what's going on with another bank, but it's kind of controlled or coordinated by your FIU. So, I definitely do think that where you can have some form of private sector collaboration, whereby you're able to share data on a formal basis with another financial institution in the interest of fighting financial crime. And all of those banks have that understanding. I think it further improves the effectiveness of your financial crime program. In the absence of having that partnership, what you'd see is, banks do whatever it can based on whatever information it has, files its SAR, and then basically throws it over the wall with the FIU. The FIU tries and consolidate whatever data they have and compiles an intelligence product, throws it over the wall to an investigating officer. The investigating officer tries to piece whatever you can and throws it over the wall to your prosecuting authority. And all of those parties are trying to do their best So there's no ill intent by any one of them, but it just calls for an ineffective process when there's no partnership. And if you actually have all of those parties around the table, you move much quicker and you actually become much more coordinated than the criminals.
And it's that fragmentation that leaves us exposed to the growth of this activity. Coming back to you, Philip, and where we started. So, you know, if I understood you correctly, the technology is there to solve it. It's the data's the problem. How are we going to get to aggregate data to be able to spot this quicker?
Can I just talk a little bit about my background? 25 years ago, we built the first insider dealing detection system for the London Stock Exchange. And then we developed a lot of the early financial fraud detection techniques. It's all about spotting unusual patterns in data. And then you let the people loose on the things. More recently, I've worked closely with the Financial Conduct Authority to move them from being reactive to proactive. And the results have been fantastic. They're now a sort of beacon for international regulators of how to automate. And we've set up things like, you know, digital sandboxes, Project Innovate, and put in and plug them into fintech companies. We do tech sprints, etc. The reason of saying this is that Mauritius has got the opportunity, firstly, to put in place a digital infrastructure so that the local regulators can collaborate, and then act as a beacon for regulators, you know, across Africa of how to actually implement automation. And this would be, you know, it would make obviously Mauritius, you know, a key come to place, you know, for fintech, but it would also be a great service to grow it and expand it to collaborating with other regulators across Africa. One of us froze. Was it me or you?
I think it was me.
Okay.
Jennifer, so the real challenge then is there's technology and means to solve this. But, you know, it would mean people giving up something in data privacy in order to attack some of these financial crimes. Your view of whether people would accept that trade-off? Someone's frozen, not sure who.
Yeah.
Sorry, Jennifer, did you hear me? Did you hear my question?
I didn't, Mike. Sorry, can you repeat it?
I said, so what I would conclude from what Philip and Anil are saying is that there's far more scope for dealing with this effectively, but it would come at the cost of people accepting less privacy of their data.
I think that's part of the challenge. And as Anil said earlier about the public-private partnership in terms of dealing with this. And the UK has a similar model in terms of the Joint Money Laundering Intelligence Task Force. And this has to be a partnership in order to protect the citizen and to protect the state and to protect the system. Because with every development increases the risk that the development is used for financial crime. And there has to be some form of an agreement that there's a level of sharing of data that's necessary in order to protect lives. And that's sometimes what these joint partnerships have done is save people's lives in terms of ongoing crimes. And it's not just about detecting the crimes that have happened. So there must be a balance in terms of protecting the data of the individual, but also protecting the wider public interest.
But I suspect at the moment, the sensitivity would be on not giving up private privacy data because they don't fully understand the extent of the financial crime going on.
But I think there's a challenge in terms of the public not understanding the full extent of financial crime, partly because it's dealt with by industry. And if your bank card is stolen and someone misuses that, then the financial institution will deal with that for you. And I think the question that I would sort of pose back to industry is, what is the cost of doing business when it comes to financial crime? And how much are businesses willing to lose before security has to change? And I think there's the trade-off between the protection of the data versus the cost of crime. And there's a responsibility on all of us to educate the public in terms of the extent of financial crime. And what does that mean? How is it hitting the individual, the business, or the government in the pocket? And that will really inform the decision-making and those policy discussions about what do we need to do in order to deal with the threat that is posed to all of us just now.
Okay, I think we have probably teased out some issues here. Yusuf, I can't see many questions coming in, but I was blanked out for a minute. As you can probably anticipate, we've tickled some issues here which we could spend days on. And so I think this is a really important issue, and I suspect we may spend even longer on it when we get to the October FinTech Festival. But it's a real and growing issue. And I think the consequences of it are increasingly being felt, albeit sporadically. But I think the systematic issues that we need to address in order to deal with it, we've started to talk about some of those in terms of data privacy, the access to data, the public-public partnership, the public-private partnership, even the partnerships. It's a holistic partnership to solve this. So I'm not going to dwell too long on this because I think we've tickled an initial discussion. Their views and thoughts and contributions, and look forward to talking to you soon more. So I hope this has been helpful for everyone attending. Thank you very much for listening.
Thank you.